evening, traders. This is Brian with TraderShark.com. I want to go ahead and talk to you a little bit about the 5-minute chart and what we had starting this morning. Even as early as like 5 o'clock this morning, a wedge pattern started. A wedge is defined by at least 5 touches. 1, 2, 3, 4, 5. Fifth touch, looking for a breakout one way or the other. We had a nice strong break to the downside, and right before market open, or at the market open, the market spiked up. So if anybody had any sell orders, this is a nice clean. With you had this kind of spread away from the break of the wedge, you have an opportunity to get short at a kiss goodbye. And kiss goodbye is just coming up where it touches the bottom of that uptrending line. Now, where do we have a downside target? Well, you just simply measure from the high to the low of the 2 last touches. Color that magenta, and we'll bring it down here from the break of the wedge to the downside target. Looks like we're off a little bit by about 1/4 to a half. Remove this. So anyway, we had a target set up. We also had our hourly range low right there at 1199.25. With that being said, we wanted to watch for our other internal indicators to see if we would get a reversal. Pulled back up to our resistance line a second and third time. Nice clean sell-off. Created a second wedge. It was a little more congested here. 1, 2, 3, 4, 5. Another wedge pattern broke to the downside, hitting our target pattern for the first wedge, and then eventually hitting our target pattern for the second wedge down here. Just an awesome trading day. We'll get into the daily trade setups here in just one moment. We then had a retest of a downtrend line here. If nothing else, if you had taken any long positions off of the bottom, this would be a nice position to be clearing your first target, second resistance line, nice and clean. A bounce off of our 40-period moving average up into, did not quite hit our uptrend resistance line before going into consolidation and working its way off to the close. Good evening, traders. This is Brian with TraderShark.com, an educational website to learn how to trade the E-mini S&P futures. I hope you enjoyed the 5-minute chart introduction. Kind of give us an overview, a little bit of a larger time frame on one of the charts that we watch in the Shark Den. Today is Thursday, October 20th, 2011. The following are examples of high probability trade setups that occur on a regular basis and are described in detail in the trading manual and in the live daily Shark Den. We are showing 7 trade setups for a potential profit of 59 ES ticks. The market opened up this morning at 1208.75, represented by the white dotted line. We don't generally trade from 9:30 until 9:45. Coming out of the no trade zone, we retraced back up into the opening price. We had a sell-off, an opportunity to get long. Target 1 was hit and got stopped out for -2 ticks. Now, we did not take this trade. We were getting ready to go into a news announcement. Didn't like trading in that opening 15-minute range, so we did not take this trade, but it was a valid trade setup, so I'm going to color it in yellow. Continue on with price action. Kind of wrapped its way around the opening price, had another opportunity to get long, and we did take this trade and we got stopped out for -2 ticks. Then when it found enough strength to get through to the downside, we found a retracement, target 1 and target 2 for a total of 11 ticks. Had some sideways movement. A lot of this was based on the news report that came out. Generally, we'll see price action move in the opposite direction of the news announcement. At least we've seen that happen quite a bit over these last few months. And the first part of the morning, it'll move the opposite of the news announcement. Later on in the afternoon, it'll respond in the direction that the news announcement was expected. So we had the Philadelphia Fed survey, came out much better than expected, and at that time your less knowledgeable traders will be trying to get this market to go long, and the institutional traders will sell it off. So that's exactly what we're seeing here. We had a sell-off, another opportunity to get target 1 and target 2 for a total of 13 ticks. And the sell-off continued, found hourly range low for support level. This also happened to be a wedge pattern target. Continued on. As long as we stayed below this moving average, we wanted to stay in a short position. And then crossing up over the moving average, we did have an opportunity to set up, but we stopped trading at 11:30. Otherwise, this was a nice clean setup, and target 1 and target 2 were hit into the no trade zone. Not generally trade from 11:30 until 1:15. That's just a period of higher volatility and lower volume. Coming out of the no trade zone, we again found resistance at the opening price. Kind of shimmied around opening price a little bit, sold off, support on the moving average. No real clean setups. We had just a lot of sideways congestion, shakeout, and we did have an opportunity to get short. Target 1 and target 2 were hit for a total of 10 ticks right there at about 2 o'clock in the afternoon. And then right about 2:30, another opportunity to get long. Target 1 and target 2 were hit for a total of 10 ticks. And as price action continued upward, we broke through our moving average to the downside. an opportunity to get a very short trade, target 1, target 2 for a really quick 6 ticks. Cross back to the upside. Again, you'll notice that we're staying long above our moving average. Retracement, target 1, target 2 are hit for a total of 11 ticks. To learn more about these and more advanced trade setups, or to get a copy of the Trader Shark trading manual, please visit tradershark.com. Thank you, and I'll see you in the Shark Den in the morning.